Hey guys, hope all is well. In this video, we're talking about common tax problems and solutions that have been occurring this year and also in years to come. So if you haven't noticed, or maybe you got a letter in the mail, the IRS recently been assessing these tax bills and saying, hey, you owe more than what you reported on your IRS. That has been a occurring matter that the IRS has been wrapping up on what we call these quick audits. So basically what's happening is what gets reported on what we call your wage and income transcript isn't matching up to what's on your tax return that you submitted. The IRS is finding that discrepancy and basically giving you a new assessment on the tax bill that you were supposed to owe, which is still an estimate in a way, but they're giving you a new assessed bill. So you're randomly getting a new bill that could say, hey, you owe us $10,000 because you didn't report XYZ. So I bet you probably don't like that. I bet you probably don't know what to do, or maybe you're going through this now. What's happening is, once again, there's a discrepancy what's on your wage and income transcript and also what's on your IRS tax return that you submitted. Maybe it's a missing 1099 from your self-employed business. Whatever it may be, there's a way to fix that. So one of the things that I have been recommending my clients is that we should amend those taxes and file it correctly. It's a simple process. And say if they don't approve those amendments, we can always do an audit reconsideration, which is a more lengthier process. But one of my recommended first steps will be to audit that tax return and file the correct tax return. Say if it's a 1099 that was not submitted on your tax return, let's amend it. Let's add that 1099, that unreported income, back to your tax return. And let's also add the expenses associated with that 1099. So the tax bill may be still higher, but it's not going to be at that high amount because the IRS did not factor in the expenses associated with that 1099. So that's just one of the things that we can do. But my first recommended steps before we do any tax resolution when it comes to packaging up a audit reconsideration, writing your letters, sending it off to the IRS, having to wait on the response, do an old-fashioned amendment and let's attack it quickly before we drag that process out longer and there's now penalties and interest accruing each month. Make sure we get that audit in quickly as soon as we get that tax bill. That's one of my solutions and recommended steps. Now, if they don't approve that audit for some reason, maybe it got in the hands of a bank that didn't know what they were doing, try doing an audit reconsideration. We're going to make another video about that, but talk to your tax preparer or your IRS tax resolution agent to say, hey, can we do an audit reconsideration on this? They assessed this amount, but they didn't do X, Y, Z. So now we're going to bring that in consideration to the IRS, and that has a high chance of basically getting approved if we package up our evidence in a clear and clean way, right? So that's just a quick recommendation of something I would do if these letters or reassess audits are coming to your mail. You should look into possibly amending those tax returns. Now, say if none of those options work, like, hey, you just messed up, you filed the taxes wrong, and now they just reassessed it. We can look into some type of installment agreement, or we can look into a way where, like, if you're facing any hardships, maybe there's an offer in compromise to say, hey, to the IRS, hey, we can't pay this. Can we negotiate some type of amount that we can pay so we can just wipe this off our hands and y'all guys will be set too as well. So there's different options out there. Don't freak, don't be alarmed. Reach out to your tax resolution specialist, your CPA. Maybe they offer these services, but if not, leave us a comment in the section below. Let's talk about it. Let's point you in the right direction, or you can work with us. Thank you.